everyone, and welcome back to the channel! Today, we are re-diving deep into a topic that has been making waves in the financial world. The incredible rise of the Malaysian Ringgit. If you've been watching the currency markets, you've probably noticed that the ringgit isn't just doing well. It's absolutely crushing it! Becoming Asia's best-performing currency this year. It's now knocking on the door of a 4-year high, and there are some powerful reasons behind this surge. So, what's the secret sauce? Let's break it down. First off, let's talk numbers. The ringgit is getting incredibly close to breaking a major barrier, the 4.1 per dollar mark. If it pushes past that, we'd be looking at its strongest level since way back in May 2021. This isn't just a fluke. It's a trend that big players like BNY and Malayan banking are watching closely. They're predicting this continued strength, and it all comes down to a few key factors. One of the biggest drivers is the sheer strength of the Malaysian economy. Things are really starting to pick up steam. As the local economy gains more and more momentum, it creates a very attractive environment for money to flow in. Think of it like a sports team on a winning streak. Everyone wants to be a part of the success. And right now, Malaysia's economy is that winning team. At the same time, we're seeing some of the global trade tensions starting to ease up. For a trading nation like Malaysia, this is fantastic news. When a global trade environment is less chaotic and more predictable, it means Malaysian goods and services can flow more freely, boosting export revenues and further strengthening the economy. It's like a massive weight has been lifted, allowing the country's economic engine to run smoother and faster. Now, let's follow the money. Where is all this confidence coming from? A huge part of the story is the influx of foreign investment, particularly into Malaysian debt. Offshore investors have been pouring money into local bonds. How much, you ask? We're talking nearly $4 billion in Malaysian bonds purchased by foreign investors just this year alone. That's a massive vote of confidence. When investors buy a country's bonds, they're essentially betting on its stability and future growth. This flood of capital acts as a powerful anchor for the ringgit, holding it steady and pushing it higher. Another crucial piece of the puzzle is the central bank, Bank Negara Malaysia. While other central banks around the world have been cutting interest rates, Malaysia has held firm. By keeping its key interest rate steady, Bank Negara makes the ringgit more attractive to hold. Investors get a better return on their money compared to other currencies where rates are lower. This strategy, known as a favorable interest rate differential, is like a magnet for foreign capital, pulling more investment into the country and, you guessed it, boosting the ringgit's value. So, when you combine a strengthening local economy, a calmer global trade scene, a central bank holding rates steady, and a massive inflow of foreign cash into bonds, you get the perfect storm for a powerful currency. This isn't just about numbers on a screen. It has real-world implications. A stronger ringgit means Malaysians have more purchasing power when they travel or buy imported goods. For international investors, it signals that Malaysia is a stable and promising market to be in. What does the future hold? Well, if the current trends continue, many analysts believe the ringgit has more room to run. The positive momentum is strong. And a break past that 4.1 level seems more like a win than an if. It's a testament to the country's solid economic fundamentals and prudent policy decisions. It is a fascinating story of economic resilience and a great example of how smart policy and a bit of good fortune on the global stage can create a winning formula. We'll definitely be keeping a close eye on this. So if you want to stay updated on the Malaysian Ringgit and other big moves in the global economy, make sure you're subscribed to the channel. Thanks so much for watching, and I'll see you in the next video.